There are hundreds of different fair value gaps created every single day in the market. And if you're still struggling to choose and find the right one to trade off, then in this video, I'm going to be breaking down how you can identify and read candle behavior to accurately choose the right fair value gap to trade off. Understanding and reading candle behavior when it comes to using fair value gaps is going to help you avoid uncertainty, avoid many losses, trade with a higher accuracy, and since you're trading with a higher accuracy, you're going to win more often, which is going to give you more confidence as a trader. So when it comes to understanding candle behavior, it's important that we actually know how to read support and resistance. So I know, again, I don't want to bore you with just standard support and resistance, so I'll make it quick. So again, support is where price is held on a key level like this. We have an area like this black line right here that is supporting price from going lower, which often leads to regular bounces off this key level, moving to bullish movements like so. Notice right here, you can see that price actually broke support. So it broke through that key level that price was bouncing off multiple times. But now we're testing that level as a level of resistance, almost like a roof or a ceiling that price cannot get past. So when we're above this level, we know that buyers are in control, and we're underneath this level, we know that sellers are in control. Just like every other aspect of trading, we want to focus on trading with who's in control of the money. That's going to be who's in control of the market at that current time, whether it's buyers or sellers, and we can use support and resistance to identify this. On the market, there's two types of candlesticks that you need to pay attention to, your current and your previous candle. You're going to be marking out the support and resistance levels of the previous candle. Now, your decision is made on what the current candle does. Now, when you're going to trade off a fair value gap or anything like that, and you want to just trade in the general direction of the right side of the market, aka either buyers or sellers, then using candlestick closures above or below previous candle high or lows, then you're going to be able to judge who's in control and make an accurate decision. Now, if you pair that with a fair value gap, you're going to have a very high trade accuracy. So in this example on the left, you can see that price now candle closed above this previous candle high, breaking resistance. You can see in this example that we also tried to test and break previous candle low, but failed. Now the candlestick on the right, you can see that we tried to break previous candle high, but then we actually closed below previous candle low. Both of these indicated that buyers were in control over here and sellers were in control over here. Now, not all the time are you going to have price reject these areas, but it is something to identify. Obviously, it'd be better if price was to stay away from that in general, right? And away from this one in general, because obviously the further away, the better. But since we're testing it and failing to actually break through, this is also another great indication of good candle behavior in our direction. Now, there are multiple different setups to actually find in the market, but I'm going to show you two that are most commonly used by me. So in this example, this is my high conviction trade. This is one of my most popular and best convicting trades for myself. This gives me the most confidence when taking this setup. So again, we have a normal 3-candle formation fair value gap, and the 4th candle retraces back into this bullish fair value gap, delivers straight out, and then closes above previous candle high. So we did it in one single candlestick. So we had little retracement, which means little sellers, and then obviously breaking above previous candle high. That's a great indication price is extremely bullish. So for the example on the right, you can see that price was obviously extremely bearish. We created a bearish fair value gap, which the 4th candle was able to retrace into, immediately flipping back down and closing below the previous candle low. So obviously we know that price is very bearish and sellers are still in control of this market, especially since we had little buy-in retracement. So we didn't see any bullish candlesticks. It was just a 4th candle retraced, giving us our confirmation to enter once price obviously delivered off that fair value gap. And now we can expect price to pretty much just run in our favor. So this is actually going to be the other common setup that you're going to find in the market. This is probably the most popular. Now for this specific setup, we have to understand liquidity, all right, and liquidity sweeps. When we see this setup, you can clearly see that price has now created a swing high, right, and a swing low, and right here, a swing low and a swing high. What we kind of want to pay attention to is the swing high in this bullish example and the swing low in this bearish example. What we want to pay attention to is the current candle. So we obviously have our previous candle and our previous candle highs and lows marked out, but what we want to focus on is this current candle not making equal highs or sweeping liquidity before closing, and same goes, we don't want it to make equal lows or sweep sell side liquidity before closing. If we do, we have a lower probability trade because this is where price is likely to reverse. If we have the candle closure without making equal highs or equal lows or sweeping buy side or sell side liquidity, we are likely and very likely and with a high probability going to run liquidity past these points and go to a further target. So if you obviously see this setup in the market, just make sure that you're witnessing and understanding that typical candle behavior mixed with a bit of liquidity sweep knowledge, that you're avoiding this potential bad setup and actually trading a high probability setup. So here on the charts, I have an example trade that we're going to be looking at. So for this example right here, we have to obviously build a bit of context. So we have to trade with a little bit of context behind our setup so that we have the correct reasonings that support our decision to obviously buy or sell in the market. So right here, you can see that this obviously went down right here. We're obviously in a little downtrend. Now coming into this market right here, you see how we had the swing low and then we're obviously starting to shift higher. Now we had that before, but we didn't have a liquidity sweep. So right here, we had a liquidity sweep and this is the highest point that price obviously went to. So in this case example, you can see that we did have a bullish trade right here. Now, understanding candle behavior, all we want to do is obviously wait until price closes above this level. However, there's a few factors that we can obviously apply and look out for. And something like what we're going to apply to this setup is understanding, you can implement breaker structures, market structure shifts, displacements to help you obviously figure out which fair value gap is going to be your right one. If you still struggle to do that, this is where obviously the candle behavior, the breaks of previous candle highs and lows start to come in. I see so many traders have their judgment clouded by what's on the left. And a lot of the times you have to worry about what's currently happening in the current price leg. And the way you can find obviously the current price leg is from the lowest point after the sweep to where price is currently trading. So we can use that aspect to obviously figure out, all right, price from here to here is currently shifting higher and breaking swing highs. All right, you can see that we're not making new lows. We have a low here and a low here, and we're not making new lows. Right, we're obviously starting to push past these previous highs. So we don't have to worry about what's on the left here, right? All we need to see is price close above previous candle high, and we can take this all the way up to buy side liquidity. So in this case, if I just wait for this, we come into this fair value gap, that's step number one. And in the same candle, we decide to flip up and close above previous candle high. So this is exactly where we can take our entry. Our stop loss can go right below previous candle low because we are trying to obviously trade with the idea of candle behavior. We know that price should not disrespect previous candle low if it is truly bullish, right? That was breaking support. Then we can target our buy side liquidity and play price out. And obviously right here, we can hit take profit. All right, as soon as we hit take profit, everything else is out the books. But you can see all up until this point, nice and smoothly to at least here, 30 points in profit. We never broke previous candle low, and then we were able to scratch to that buy side right there. These trades happen literally every single day in the market, whether it's forex, futures, stocks, doesn't matter. These are this is probably one of the most popular setups. So let's take a look at one more example in the market. So right here, as you can see, that price obviously had buy side liquidity. Again, same thing right here. You can see that we are moving in a downtrend and we need something to obviously support our decision to want to trade a continuation of price trying to find higher prices. So in this case example right here, you can see that price obviously swept this sell side, made a new high and swept more sell side and then started to displace higher. All right. Now, as in this example right here, again, another cloud of judgment could come where this gap could hold or price could sweep this, and this could obviously confuse you. But again, what we're worried about is the current price leg from this low to this high. What is actually happening in real time with this setup? So in this example right here, you can see that price obviously came into this bullish fair value gap. Now we kind of hesitate, do its own thing, does what the market usually does, and obviously, trolls people. What we're focusing on is when price candle closes above, that's the indication that market's like, hey, I'm ready to go now. All right, that is when we're ready to go, and that's when the market's ready to go. So we don't have to sit through this insufferable PA. Now we obviously have a breaker structure, which obviously helps us right here in our decision making. But if you ignored that and you just followed this simple setup, you can see once price closes above, it did not sweep previous swing high, which is obviously a valid setup, which means we can take our entry right here. Our stop loss can go underneath previous candle low, underneath the swing point. It is completely up to you. Now, since I run 20 points as an absolute minimum stop loss, I might as well just put it underneath this swing low right here. right? And because I don't enter with 15 or 10, that's just my personal preference. And right here, we can hold it up all the way to 80 points. Now, 80 points is a little excess for my sort of style of trading. I usually like to go for 40, max 60 points, but we're gonna do this anyway because we trust the setup. So as you can see, we never actually came back to that previous candle low. And we even had another setup where price obviously delivered a fair value gap where we closed above previous candle high once again. So if I zoom in here, right here, you can see that we did actually very faintly close above without taking that swing high. So once again, another setup, and we can obviously go all the way up and hit our take profit, which is all the way up there. All right. So it does take a while. And the reason I only target max around 60 points is because price moves smoothly to this level before we start to do this aspect of the move. Now, yes, you can target large risk rewards doing this, but again, looking at around 60 points, which is actually perfect in this scenario, price moved very smoothly up until that point before we started to consolidate there and then obviously explode back to the higher prices. So that is it for this YouTube video. If you want me to make an entire new YouTube video on just candle behavior and understanding everything about candle behavior, then comment the words candle behavior in the comments and I will obviously like it. And the more I get, I'll be more inclined to obviously make that video. So obviously I want to know what you guys are interested in and want to learn more about. And obviously I want to be able to provide that value for you. Again, subscribe for more educational content and I'll see everyone in the next video.